Welcome back to the ETF Inspector. It's Saturday, August 16th, just about 9:45 at night. We made it home, our drive from the beach. Vacation mode's over. I never got around to making this video, so that's why it's coming out so late. Still wanted to put out on its normal day, Saturday. So this is a video for the 7 YieldMax individual income strategy funds, AMDY for advanced micro devices, AMZY for Amazon, APLY for Apple, FBY for Meta, GOOY for Google, MSFO for Microsoft, and NFLY for Netflix. Before we get into it, just a reminder, I'm on X at ETF_inspector1. I let you know when videos are premiering in case you like to be in the chat. I post things I'm going to be involved with, like just this morning I did a spaces with Ambassador of Quan, Parabolic Nurse, Retire on Dividends, and Max Convexity. We were all talking about Ulti on that. It seems like it's going to be a normal Saturday thing. I let you know trades, distributions, all the good stuff related to the ETFs that we talk about on the channel. Little update, we're up to 3,580 subscribers, so growing still, doing well. And now let's go ahead and get into looking at these funds. For starters, I've got the 1 week chart here, and we'll just take a look at how the underlying did compared to the YieldMax fund covering it. Okay, so AMD up 4.3% over the course of the week. AMDY up just under 4%, so capturing a good bit of the upside that AMD had. Amazon was up just about 4%, 3.96. AMZY up 2.88, so not quite as much. Apple was up almost 2.5%. APLY up 1.6%. Meta was up 2%. FBY was actually down 1.9% over the course of the week, but that is also because they paid a distribution this past week. Google up 1.9%. GOOY up 1.9 as well, actually beat it by 0.02%. Microsoft down just about 0.25%. MSFO flat. And Netflix up 2.7%, with Nephley up 2.27%. So not bad. These funds are not meant to mirror the underlying. That's not what they are. They are generating income off of the underlying. So let's go ahead and take a deeper look. We're going to start with FBY because they just had a distribution this past week. So last week we made our estimates, told you that they actually lost 20 cents a share trading, so their distribution wasn't going to be based off of that. The IV was telling us around 33 to 34 cents. I upped that to bring my guest up to 49 cents, and they actually paid even higher than that, 62.41 cents per share. So I was off by 21.5%, but hey, that's great. We got a nice high surprise. Generally, they're supposed to pay the income, but if they don't make enough, they're supposed to pay based off of the IV, and instead they paid almost double that. So we're happy with that. I say I'm a YieldMax investor, but I don't actually have FBY, so I'm not in that category. We'll look at the trades that they made. So since this past week was the payout, then the last 4 weeks were what went towards it, and we started a new 4-week cycle. As you can see, trading only took place on one day this past week. It was Friday. Looks like they were basically closing out for the week and rolling to the following, and overall cost them $507,000. All right, Meta up pretty big for the week. is going to basically blow through the calls, causing you to have to pay extra to close them out. That distribution of 62 cents was roughly a 47-48% annualized yield. Not getting that too many places. There's $190 million in assets under management within the fund. Over this past week, there was an increase in outstanding shares, people buying into the fund to the tune of 100,000 shares, bringing them up to 11,250,000. The NAV and closing on Friday were within 2 cents of each other. They're sitting on a synthetic for $725 September 19th that is currently worth $15.5 million or $1.39 per share. So when they close that out, that's going to be nice. It's possibly why they paid a little more than what they needed to, because they know they had that in reserve, but not necessarily. We're now looking to September 10th for the next declaration for Group B. That's 25 days away. Calls for this coming week are sold at 8:05, and then they've purchased their protection calls at 8:22.50 and 8:25. Those sold calls are 2.5% out of the money. Next, we'll look at Group C funds, because they are going to be paying this week. So for this past week of trading, AMDY had trades on Wednesday, Thursday, and Friday. Again, looks like on Wednesday, we'll look at the chart. AMD probably had a big jump right at the end of Tuesday into Wednesday. So on Wednesday, they were going to be closing out things that went into the money. And it's a shame, because then prices came back down. It probably would have been okay, but if they knew the future, we'd win every trade. So the closeout and roll cost us about $2 million on Wednesday. Closing additional shares and rolling them on Thursday worked out to the tune of a credit of $660,000. And then on Friday, completing the remaining rolls from the 15th to the 22nd resulted in a $295,000 credit. All in all, totaling all the trades for the 4-week cycle, they did lose money trading $4 million. So when we go to make our estimate, they lost 18 cents a share, so that one doesn't work. We look at our IV, it increased over the past week to 42.7%. So the IV estimate is 30 cents per share. When we take a look at what they've paid recently, 30 cents a share. It's been 5 weeks since they've paid something that low or lower. Obviously 33 is not that much above, and I didn't mean weeks, I meant months. They've been paying a lot extra, and they've been paying a whole lot higher annualized yield than what their IV has been. So for those reasons, and for the fact that their synthetic is worth $26 million or $1.18 per share, I upped my estimate to 45 cents a share. And again, I wouldn't be surprised if it was even higher. Their synthetics for 155 September 19th expiration. Stock is currently at 177. There's almost $200 million assets under management here, 198. There's 21 million, almost 22 million outstanding shares. Again, the NAV and the closing price were within a penny of each other. They'll be declaring this Wednesday, August 20th. And we've got calls sold for the next week. Obviously, we're going to have calls purchased on each one as well for protection in case the stock runs through it. I'm not going to go over them every time. But our sold calls, because AMDY AMD is one of our higher volatility funds out of these 7, they do sell them further out of the money. So they are 4.2 and 5.6% out of the money, sold at 185 and 187.50. We're going to skip over now to MSFO. It's another Group C. We'll look at how they traded this past week. trades on Tuesday, Wednesday, Thursday, and Friday. Tuesday's trades were pretty funny. Closing and rolling somehow resulted in exactly $0.00. On Wednesday, more closing and rolling, this time to the new week. On Tuesday, that was within the same week, August 15th to August 15th. Now on Wednesday, they started rolling to the following week, collecting $117,000. On Thursday, they had a little extra going on. They were buying more, so more money came in, so adding 70 contracts to the synthetic. That cost them a decent amount because the synthetic's doing well, so the calls that they purchase are already in the money now. So when they add to them, they had to pay a decent amount, $30 compared to what they received selling the puts. Then they went ahead and sold calls to go along with the new synthetic positions, then closing portions that were expiring on Friday and rolling to the following week. All in all, resulted in $155,000 credit. And then on Friday, closing and rolling what was left open for Friday to the next Friday, collecting $32,000. When we take a look at the full 4-week cycle, they lost $765,000 in options trading over the time frame. So again, our estimate is negative based on income, so we're not using it. Backup plan is the IV. Based on the IV, which did increase to 18.5%, that's for Microsoft this past week, yep. That would be a 26-cent distribution. When we look at Microsoft, or MSFO rather, we've got 40s, high 40s, 50s, low 30s, high 20s. They kind of bounce all around. So estimate says 26 cents. Last time around, they paid 29%, or 41 cents. Their synthetic does have some value. It's for 500 strike price with September 19th expiration date. Stock's at 520. That's worth 75 cents a share. So taking that into account, as well as how the fund performed, MSFO over the month is up slightly, 0.5%. So with that being said, they can afford to pay close to the same distribution because they basically made it back. So that's why I came up with my guesstimate of 37 cents. There's $149 million in assets under management within the fund. 100,000 shares were added over this past week, bringing outstanding shares up to 8,250,000. The NAV and closing price on Friday within a penny of each other. Again, declaration days in 4 days. That would be Wednesday the 20th. They've got calls sold this week at 527.50, 532.50, and 540. Those are 1.4, 2.3, and 3.8% out of the money. Next up, we've got Nephley for Netflix. They had trades on Tuesday, Thursday, and Friday. They lost money all 3 days. Tuesday, closing and rolling within the same week because the price went up. As you can see, they changed it from $12.15 to $12.35, paying $19, collecting $8. That cost them $393,000. That is part of your active management, though, right? So they're gonna uncap the potential rather than just leave that option in place and no longer be able to increase the value of the overall fund as the underlying stock runs up. On Thursday, now we're starting to close and roll to the following week, closing out things for August 15th, selling for August 22nd, but the prices were still well beyond what we had sold, so they cost $565,000. Now, when I say we on this one, I do have Nephley within my trading account. And then finally on Friday, some money came out of the fund, so closing out 60 contracts of the synthetic. That cost money, because in this case, the stock has dropped since the synthetic was made. So the puts became more valuable that were sold. So buying to close them cost more than what we received selling the calls. And then we went ahead, closed out the positions associated with them, then closed the remaining positions still open for the 15th and rolled to the following week, the 22nd. That cost $314,000 on Friday. When we total up the full 4-week trading cycle, they lost $281,000 trading options. So when we go to make the estimate, that would come out to a negative 3 cents per share. So again, we're not using that. Based on the IV, it would be 35 cents per share, with the 30-day IV of the underlying dropping to 25.6 over this past week. Taking that into account, as well as looking at previous distributions, we look at Nephley, 43s, 68s, 92, 60, 40, $1.58, right? So we haven't been seeing numbers this low, but at the same time, Netflix did take a beating recently. They're down over the past month, but they have at least made some of it back. So we've got 43 cents was the last one. It was about 32%. The underlying's down. The fund itself, Nephley, is down over the past month. The IV is down, and the synthetic is actually in the negative, so it's not like we've got value waiting for us. But I don't think they're going to go setting the record with their lowest distribution. So I did up it to 38 cents. Again, we could easily see something in the 40s for sure, but I don't know how to make guesstimates that are just high for no reason. So I'd show you how I came to it, and if it makes sense, great. If they pay more, that's a nice surprise. There's $175 million in assets under management within a fund. Like we said, people did sell out of the fund. They had to close out portions of the synthetic. 150,000 less shares than last week, bringing us just under 10 million. 9,975,000. The NAV and closing price on Friday were dead on with each other. Our synthetics for September 19th, 1280. Netflix is at 1238, just about 1239, so that's underwater. Would cost us almost $5 million to close out right now, which would be roughly negative 50 cents per share. Calls sold for this week are at 1255, 1260, 1262.50, and 1265. Those are 1.3, 1.7, 1.9, and 2.1% out of the money. So realistically, one big day and all calls are blown through. But in general, Netflix doesn't always make big jumps, but it has lately. All right, so we will find out on Wednesday the 20th what that distribution will be. Okay, now we'll finish off with the rest of the funds that didn't pay last week and won't pay this week, so we're going to get through them a lot faster. We don't have estimates to make. For starters, AMZY had trades on Wednesday and Thursday only. Wednesday, they started closing out things expiring this past Friday and rolling to the following week. Let's see, we're closing out for $5, selling for $1.46. Closing out these 220s, selling 230s. Obviously, Amazon ran past our strikes, so we had to roll up and out. When that happens, it costs you $2.2 million. On Thursday, same thing, closing out the remainder of calls that were sold for August 15th and rolling them to August 22nd. Again, having to increase our strike price. So that cost $1.5 million. All right. AMZY, has $296 million in assets under management. People selling out of this fund as well to the tune of 100,000 shares, bringing them down to 18,875,000 outstanding shares. NAV and closing price on Friday were the same, 1572. Their synthetic is at 220 for September 19th, with the stock at 231. That is worth about $15.7 million or 84 cents per share. They last declared on July 30th and gave a distribution of 64 cents. Next one will be in 11 days on August 27th. And they've got calls sold this week at 230, 235, and 240. Those 230s are starting the week in the money by 0.45%, and the others are 1.7 and 3.8% out of the money. APLY, also part of Group D, had trades on Wednesday and Friday. Wednesday, they began closing out calls expiring Friday and selling for the next, with the having to increase by $10 because the stock ran up. So paying $5.28, only collecting $1.82. It's going to cost you $1.4 million. And then on Friday, just closing out the remaining shares, options, closing the 232.50s and selling 235. So not a major increase, only $2.50. And obviously they weren't in the money because they only cost 22 cents to close out, collected $1.64. So they had a profitable day, $180,000. When we take a look at APLY, there's $154 million in assets under management. There was no changes over the past week for shares, 11,425,000 outstanding shares. The NAV and closing price were within a couple cents of each other. You actually were getting a discount if you bought at close on Friday, your 2-cent discount. The synthetic for Apple is at 205 for October 17th, and that is doing well because the stock's at 231.59. It's worth $19 million when they go to close it out. It's about $1.67 a share. With us coming close to the end of the fiscal year, we could see some decent distributions coming at the end based off of that. Again, they will be declaring on the 11th, or 11 days from now, on the 27th. Sorry about that. Their most recent, on July 30th, they announced a 41-cent dividend that they paid out that Friday. They've got calls sold at 235 and 237.50 expiring this coming Friday. They're about 1.5 and 2.5% out of the money. We already talked about FBY, and so GOOY will be the last one of the video. All right, on Tuesday, they closed their, looks like 200s and increased them to 207.50s for within the same week. So paying $560, only collecting $160, resulted in an $86,000 debit. Fortunately, it was only for 300 contracts. On Friday, they closed out the remaining calls for the week and rolled them to the following week, paying $383 for some and only collecting $1.58, selling them, paying 21 cents for others. This is where it gets and collecting $2. It just looked funny. So they made out well on those. And then closing out 202.50s for 384, selling 212.50s for 156. That cost them. And again, so closing 205s for 63 cents and selling 210s for $1.90. All in all, they took a loss of $315,000 on the trading day. All right, GOOY is part of Group A. They previously declared on the 6th, paid 2 days later on the 8th. It was a distribution of just about 45 cents, which was just about 45% annual yield. Next declaration is September 3rd, 18 days away. The IV on the fund has dropped on the, not the fund, on the underlying to 29.7%. They have a synthetic at 180 for September 19th. The stock is at 203.90, so that synthetic is currently worth 18,671,000. I didn't explain this every time, but when I say they have a synthetic, they have a single strike price for the synthetic, but they actually have 7,615 contracts there, and each contract's worth 100 shares. So we're multiplying all those differences out. That's how we get that 18 million. It's worth $1.60 per share, so we like that coming into the to the closing of the fiscal year soon. There's $152 million in assets under management. There was a decrease in shares this past week. People selling out of the fund to the tune of 100,000 shares, leaving the outstanding shares at 11,650,000. The NAV and closing price on Friday were right on with each other at $13.10. And they've got calls sold for this coming week at 210 and 212.50, just about 3% and 4.2% out of the money. Okay, that's everything. That's all 7 of our funds. So I do want to say I'm very much considering ending this series. There doesn't seem to be a lot of interest. These funds are not growing. A lot of them are shrinking, not getting a whole lot of views. The views on these aren't growing even as the channel grows. So just want to put that warning out there that this series may be ending for these 7 individual income funds that aren't all that popular. But for now, I'm just going to thank you for watching. Thank you for all the likes, comments, shares, everything you guys do. And got a dad joke of the day for you. Now this one's a little different. It's coming off my dad joke calendar, so got to work with whatever I have. I'm going to have to kind of type out the answer because it's more of one where you need to see the answer as opposed to speak it. So, dad joke of the day: what do you call a laughing jar of mayonnaise? Answer: LMAYO. Kind of looks like LMAO, but El Mayo. Yeah, that one's pretty lame. Didn't get anybody to laugh, not even my wife when she walked by. All right, have a good night, and keep an eye out for the Ulti LFGY video coming out tomorrow. Seems to be everybody's favorite. And then, of course, if you are just interested in trading in general, I did put out my personal trades video every week. I just let you know all the trades I made within the week, options, everything. I collected dividends from these high yield dividends funds, and it's just fun to see if how people trade. So, all right, have a good night, and talk to you tomorrow.